U.S. stocks had a little bit of a back and forth session, but by the end of the day, we closed higher on most of the indices out there. In fact, the Nasdaq now has a 5-day win streak, and we actually had enough of a oomph to push our posture from weekly bearish to strongly bullish once again. We'll see if that changes tomorrow. Of course, tomorrow is options expiration for the month of June, so that has the potential to have a little bit more volatility. But right now, things are looking more positive than negative, which is a good sign. We'll take a look at all that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to feature a dividend aristocrat company that might be priced at an interesting level for a long-term investor. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 18th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel. While you're there, check out our description area and sign up for our email distribution list. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee. I would encourage you to follow me there. And remember, if you get value out of these videos, be sure to click like for us. We need to know that you guys are supporting these videos. We don't make any money doing these videos, so we don't make any advertising money, and we don't get paid directly to do these videos. So we do them for promotional purposes. So if you guys do get value out of them, we would encourage you to click like. That's the best way to let us know that you'd like to have them as often as possible. As many of you are aware, David was out of the office yesterday, so he was not able to do the video at that time. But generally speaking, if we're getting supported on Twitter by this product, then we'll do our best to get this material out to you as well. So please do your part there. And then lastly, we have a presence over on Facebook as well. Feel free to join our group at that web address you see embedded in the logo there in front of you. All right, let's go ahead and jump into our charts here. And as you can see, I've got chart 4B pulled up here in front of us. And just to kind of put a period on the end of this statement, we are back to those bullish postures like I mentioned in the intro. So it was a very brief period of bearishness and it didn't pan out, and that's actually good. You know, you test the waters in a posture change, and we were a little more cautious here the last 3 or 4 days as this chart was pink during that time, but we got enough of a oomph off of that moving average. We saw that bounce off the moving average maybe about a week and a half or so ago, and that was enough to kind of push us back into this bullish territory again. So you can see that the green intermediate line on the market forecast was going lower, went below the upper reversal zone there, and that's when you went to that bearish posture. But just here today, we had enough of a turnaround where that green line is starting to tilt back higher again. So officially, our posture is back to strongly bullish at this moment in time. And again, tomorrow is options expiration, so you never know when a big day will come out of the blue like we saw back here to kind of distort the charts. But for right now, it's a positive sign, at least if you're bullish in these markets, which I think probably most of you are. So the SP 500 was up 0.06% today. The Dow Jones Industrial Average was actually down a touch today. It was down 0.15%. The Nasdaq Composite was up the most out of these four here today. It was up 0.33%. And you can see here, I know it's hard to identify there with the naked eye, but we actually have had 5 days in a row of positive returns on the Nasdaq. The last 3 have largely just been sideways, so they might have closed up by a couple of pennies here or there, but at least they didn't give back gains. And so that has been more of a leadership area once again. And then the Russell 2000 finished higher by 0.04%. And again, all of our charts now have that green background color, and they're all trading above rising moving averages, which is why the green 30-day moving average line on each of the charts is visible for us there as well. So for the most part, path of least resistance continues to be to the upside. Let's take a moment to pop on over here to Twitter. And as most of you are aware, David and I try to pin the most recent market Outlook post to the top of our timeline to make it nice and easy for you guys to find. It looks like last time around you guys were only able to get up to 87 on the likes. As most of you are aware, we try to get up to our goal of 100. And like I always say, if you want a 15-minute kind of reduced version of the video, then you don't have to click like. If you do want a full 30-minute version of the video, then if you click like and you have 100 other people that are doing the same thing, then you'll get that. So at this point, we didn't quite get to 100, so we'll keep today's video nice and slim. Quick hitter there for you, just a quick check-in, and that's probably for the best as well. Many of you are aware that my dog is in surgery right now, and so we're hoping for the best for Simba, but I'm kind of on pins and needles right now waiting to hear back from the surgeon there. So anyway, we'll keep today's video nice and short. By the way, I did teach my question and answer session earlier today. So for those of you that are premium members of Market Scholars, I do have that recording posted. So if you're interested to hear my thoughts on Polaris or Corning or Omnicom, or RGA, which is a reinsurance company, or Walgreens, or just some basic sell rules when it comes to dividend growth investing, feel free to check out that recording that is available up here on our Trading Rooms calendar, again, for those of you that are premium members. All right, back to our charts. Let's go ahead and take a peek here at our 3 green arrows chart, and that will be 4D. As we're looking at this, you can see here that we do have white background colors over our candles for all 4 of our charts here currently, which reminds us that we have a mix of red and green arrows. We don't have 3 green arrows, we don't have 3 red arrows, we have a mix. And so there's conflicting signals there telling us that we don't have a strong trend one way or another. We're leaning more bullish right now, but we've kind of lost a little bit of momentum. And the reason I say that is you'll notice that where we are having some difficulties is here with the MACD histogram, where we've got that red arrow there on the S&P 500, right there on the Dow Jones, right there on the Nasdaq Composite, and right there on the Russell 2000. So we actually got the green arrows back on all of our stochastic readings. It's just the MACD histogram that's the laggard right now. And remember, that requires us to have a burst of momentum to the upside. The good news is many of those MACD histograms are kind of rounding the corner and they're heading back towards that zero line. So if we can get a quick little burst here or there in the coming sessions, we might have a chance at getting some of these charts to go back to 3 green arrows. Let's go ahead and now take a look at the 1040 crossover chart. This is 4C. And as you can see at this current moment in time, we have 2 out of these 4 charts with bullish crossovers and 2 out of the 4 with bearish crossovers. The 2 bullish ones are the S&P 500, which gave us our crossover on this 10-week versus 40-week view just last week. So this is somewhat recent information there. If you haven't been watching these videos recently, be aware that the S&P 500 now has a golden cross when you're using the 10-week moving average and the 40-week moving average. The Nasdaq, that's old news. We've had that really for the last couple of months. That dates back to early May. So I guess it would be the last month or so that we've been in that bullish territory for the Nasdaq. And the Dow Jones is getting closer each and every week. You know, with any luck, we might get there in the next couple of weeks of a bullish crossover there. And then the laggard here at this point would be the Russell 2000. There's a little bit more separation between that 10-week moving average and the 40-week moving average there. So that would be considered our laggard from a longer term perspective at this moment in time. Let's go ahead and take a look at some 12 grids now. 5A is the next chart on the board, and you can see here that we've got a little bit of a mix between green and red backgrounds. The 2 red backgrounds are TLT, which is long-term U.S. Treasuries, and gold, which in this case, gold is still above a rising moving average, so it's not strongly bearish. It's just kind of meandering sideways more than anything right now, and we're trying to figure out which direction it's going to go. So both of these charts don't give me too much concern in terms of a big dump off here or there. It's really that they're just kind of trying to figure out which way they want to go at this point and haven't really made up their minds yet. The path of least resistance on TLT, or long-term U.S. Treasuries, is down because that moving average is red, whereas it's the opposite for gold. At this point, we're still going to make the assumption that gold has a better chance to go higher than lower, but obviously if that changes, we'll keep you posted on that during these videos. Otherwise, the rest of the charts did go back to green, and that's a pretty healthy turnaround. The same thing will be said here in just a moment when we look at at the sectors, but I did notice a major transition from Tuesday to where we're at just here now on Thursday. And of course, that should make some sense since we just got done saying the same thing on the S&P 500, the Dow, the Nasdaq, and the Russell 2000. All of those charts went back to a bullish posture. So I guess we shouldn't be surprised to see EFA, which is the foreign developed stocks, also go back to a bullish posture, and the emerging markets foreign stocks also going back to a bullish posture. Now on to the sectors here. And as you can see, we now have positive vibes coming through for our U.S. sectors. And remember, on Tuesday, that was not the case. So a lot of times there's a few stragglers here or there. It's a little bit odd that we flipped from pink to green fully across the board. Now, there are still a couple of laggards. And remember, those are the two laggards. In this case, the energy and healthcare, they have that lighter green background color there. Remember on Tuesday, those were the two that had the dark pink. So in other words, all the intermediate lines on the market forecast started tilting higher since Tuesday. But because the healthcare is below the 50th percentile at 41 and energy is also below it at 46, their background color is only that light green, whereas all the rest of these intermediate lines are above 50 and also kind of started to tilt higher here in the last 48 hours or so. So that's a good sign. And like I mentioned on Tuesday, we didn't want to count most of these charts out anyway, because most of these charts were trading above rising moving averages. The only exception to that was healthcare, which is why we did the bearish trade on the healthcare stock on Tuesday. That one is trading below its moving average. Otherwise, all the rest of these charts are trading above their rising moving averages at this point, including the financials. The financials are at 60 and rising. You can see they're nicely above that moving average there. And that is our segue into our trade application example. And so for this, I'm going to go ahead and pull up chart 2A, our dividend stair-step chart. And this conversation is going to be very similar to the conversation I had with you when I talked about VF Corp. Remember, it was maybe a week or two ago I talked about VF Corp, and I talked about buying in thirds. We did buy our first 100 shares of VF Corp at $60, so we're already up $3.50 on that, but we still have 2 open orders down below in case we have some sort of a market pullback. Going back to that conversation, recall how I said it is my expectation that those March lows will hold, and if there are pullbacks between now and that price, that those are pullbacks to be bought and not sold. And I'm going to hold true with that philosophy with Aflac as well. This is another dividend aristocrat company. And as we kind of scan in here more recently, you can see it came all the way down here to below 25 in March, has started to rally back, but remains below this blue line right here, which tells us that it's still trading at an attractive yield compared to where its yield typically is, at least for the last decade. So it's yielding 3.02% right now. Typically, if it's yielding more than 2.88%, it would be deemed somewhat attractive. So I'm going to do the same thing. I'm going to go into this in thirds with the hope of buying my first 100 shares tomorrow at $37.11, which is where it closed today. I'll do another 100 shares if the stock were to fall $5 per share below that, so at $32.11. And then my final 100 shares would be if it fell another $5 down to $27.11. So let's go ahead, place those trades. And I'm going to come over here, click on the ask price. And we'll try to get this done right at $37.11, which was the closing price here today. I'll put that in as a good till cancel order, so that one is in. Let's do another 100 shares here. In this case, we're going to do it at $32.11. And again, good till cancel, since that's likely not going to happen tomorrow. Confirm and send. There she goes. And then the final one, another 100 shares that we will put in there, and put it in at $27.11 in case it gets back down to those lower areas of where it was in March and April. Confirm and send, and there it goes. All right, we'll see if we can get filled on that trade tomorrow. David should be back from his vacation at some point this weekend, so I would anticipate a market outlook video at that time. Again, if you got value out of this video, I would encourage you to go over to click like on Twitter if you'd like an extended version next time around. Otherwise, if you prefer these shorter versions, then don't click like. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.